everyone. We are here in our basement enjoying some wine and thought we would answer one of the most common questions that we get asked, which is, what's the difference between an FHA loan and a conventional loan? So just as a reminder, we're MTG Family Mortgage. He's the M, I'm the T, we're the G. So Mike, what are some of the differences?
This is a great question. We do get it a lot. And to help illustrate this, we're going to use my red wine as a conventional example and your white wine as FHA. How's that sound?
So how about if you share something and it's a benefit that one loan has that the other doesn't, the person who has that color wine gets to take a sip.
Are you talking about a drinking game?
Yeah, I am.
Okay, let's do it. Let's start out by doing down payment. My red wine, conventional, for maximum financing will allow as little as 3% down. Unfortunately, your white wine, FHA, goes to 3.5% down. So I think that's a benefit to me. 3% versus 3.5%.
All right. So what about seller concessions?
Good question. Seller concessions, for those of you that don't know what seller concessions are, that's where the seller can help pay for some of your closing costs. So if you have a $300,000 home and conventional allows 3% seller concession, that would be $3,000 towards your closing cost. FHA will allow 6%. Sounds like you win.
That.
Next, we'll talk about interest rates and PMI. Interest rates and PMI with conventional financing is risk-based. Now, all loans have a little bit risk-based pricing involved in it, meaning the lower your credit score is, the worse pricing you get, and the higher your credit score, the better pricing you get. But conventional has a wide range. So if you have a really high credit score, you're going to get a lot better rate than if you have and PMI than if you have a lower credit score. Now FHA, their risk-based pricing doesn't fluctuate as much as conventional. So somebody with a lower score will have the exact same MI as somebody with a higher score, and their pricing probably won't fluctuate as much either.
So it sounds like it's kind of a tie.
Cheers. Finally, appraisals. This is a big difference between these types of financing as well. FHA is going to be more stringent on their appraisal. They're going to be looking for safety, they're going to be looking for paint peeling, no guttering, different things like that. If the house has some deferred maintenance, it may not be a good idea to use FHA. Conventional, on the other hand, will allow a lot more flexibility for the appraisal.
Well, if you have any questions on what loan might be a best fit for you, just contact us. Cheers.